Diving back into this hedging. So you'll see here with me, now I was already hedged when I opened this position. I had pretty much an equal number of puts to calls. Now it crashed really hard before and during earnings, and I made a bunch of money off those puts. So my hedge already made money. And now I have these calls, and now it reversed, and now it's going up, and now my calls are making money. So I'm making money on the downside and on the upside. But it's up. Let me pull it up on my screen. I'm sorry, I don't have it here. I use a computer, and I'm on my iPad recording. So it's up 17% today, and the Feds are speaking today. And meanwhile, I've sold off all of my hedge. Now I had great timing in that sell-off because I made some good money there, but I don't want to be out here naked. I got 41 calls sitting here, and I don't want to be naked without any hedge. So I'm going to go to options. This is one way you can do it. So I'm not, the Fed meeting's this week, so we'll see how cheap some puts are this week to just get us through. So you can go 750 puts. I was selling those earlier for a lot more than that. So I was selling those for like 40, 50 bucks. And you can get them for maybe $5. So I'll put in an order just real quick just to see if I can pick up any for $5 real cheap. So one strategy to do it is if you have a short-term event. So this week the Feds speak today at 1:30. That would be my short-term event. So I'm playing around that event. So the way that I'm going to hedge this, I don't necessarily want to sell off my positions because they're making money. It's going my way right now, so I don't want to sell these off, but I don't want to be naked. So I like September puts better because a lot of my positions are there. Let's see if October doesn't get much more expensive from September. 38 cents, 63 cents. December's October, so that's 2 months there. So you're looking at about 20 cents a month here on these. So I'm going to stay real short term just in case, because this thing's either going to keep going up or it's going to head down. If it heads back down, I want to have some short term puts that'll pay off. And if it heads up, I already have plenty of calls. So this is a lot cheaper than next month's. Couldn't get any for 5 cents, so I'll just grab a handful. Oh no, that was I was buying another call. I'll just grab another handful here for 10. Boom. And so that was a very cheap hedge. So I spent 50 bucks to hedge a $1,000 investment. So that way, if me keeps going up, I'm good to go. If it starts going back down, I'm kind of good to go. You know, I already made a lot of money on this play, so I'm not too worried about it. But if I was worried about it, I could kind of even out my investment into puts. I'm just going to add a few more right now just because it is starting to head down. And these are way out of the money puts, but this is just really to save me from something catastrophic. So that's one way to use puts to hedge. You can use them a shorter term to keep the budget low. If it's around an event that you may be concerned about, like the Fed meeting today, or you could go a little bit longer term out if you just want to have positions that you're not thinking about as much. So I hope that helps you guys.